Hi traders, Nathan Bray here from ACY Securities. Well, today I want to break down and do an analysis of gold for you. Now, as I mentioned, my name is Nathan, but what you don't know is I'm a bit of a gold bug. So when you have an emotional affinity like your favorite rugby team or your country playing in the World Cup, it's important not to get too emotional. So when I'm looking at gold, I have these 4 pillars of analysis that I'll look at before I make my decision. So the things I'm going to look at are interest rates. Number 2, inflation. Then I'll look at the other side of the trade, which in this case might be the US dollar. And then the 4th thing is fear. So I'm going to have a look at those 4 things with you right now. Feel free to make your own mind up, but I will give you my opinion based on what I'm seeing in the market. So the first thing is interest rates. Now, we are hearing from the presidents at the Federal Reserve. For example, recently Bullard said that interest rates are going to continue to be aggressive in raising them above that 5% level that they spoke about. Now, when I look at the market, so if I look at things like treasury bonds, okay, in US dollars, I'll look at the 10-year yield and the price is only about 3.5%. Now, if the bond yields are forward projecting, then shouldn't they be going in line with what the Federal Reserve is saying they're going to do? They sort of disagree at this point. The second thing I'm looking at is the 2-year then. We'll go 10-year and we'll go 2-year yield. It's only about 4%. So it's almost like at the current 4% level, approximately where the actual interest rate is, it's almost like the market is suggesting it might be topping out or getting ready for a pause. Even if you look at the 85% of economists surveyed are suggesting that we may only see a 25 basis point raise coming up. So all those indicators are suggesting to me that the recent interest rate hikes that we've seen may be starting to come to an end or come to a pause. That, folks, in my view, is very good for gold because as interest rates were rising very rapidly, people were thinking, well, I'll get US dollars and get a return rather than just ending up buying gold and getting just a rock. So if that's starting to plateau out, or potentially even pull back over the coming years, then that is very good for gold. The second thing, of course, is inflation. And right now, look at the data around the world and even out of the US itself. This inflation level, the target is back at 2%. Now, inflation is sticking around. They call it sticky inflation and that the core retail levels are rising. We even had Fed President Loretta Mester come out last week and she was saying, yes, inflation is still going up, but it's not going up as quickly. All right. So what I'm hearing is a positive for gold, a big tick from me. So inflation is still sticking around. And if gold is an inflation hedge, which it has been historically, then that's another yes from me. Now, the third thing is the US dollar. So I look at this US dollar and it's been weakening. Why has it been weakening? Well, we have been seeing some really negative economic data coming out of the US, and we've also been seeing inflation sticking around and their economy contracting. So all of those things are pointing to a potentially weak US dollar. I mean, even if the US dollar does decide to consolidate down at this major level, that is still going to be okay and not a headwind for gold. Now, the fourth thing I'll look at is looking at the previous 2 double tops, okay, when it comes to the fear trade. When something dramatic happens in the world, you might see price suddenly spike up out of fear. For example, COVID. We saw what I call the COVID top in gold, if you look at a monthly chart. And then we saw what I call the Ukrainian invasion top as well. So both the market tend to sort of look at both these events and say, well, price, the drama wasn't as big as the market might have been thinking. So we saw price sell off and form that double top out of fear. Right now in the world, yes, the fear hasn't disappeared, but it's still lingering around, but I don't see it as a major effect at the moment. Now, heading to technicals. Because now that we've got a bunch of fundamental reasons going in our favour, looking at the technicals from my view, I'm seeing price start to move higher above this 1920 2011 all-time high. So we saw price go up on the fear trade above that level during COVID and fail. And we saw price going up during the Ukrainian invasion and by Russia, and it failed back below there as well. But keep in mind, when it did spike, we had very little inflation, if any at all, okay, as far as the range goes. And we also had close to 0% interest rates. So we're seeing a totally different scenario at the moment. We're seeing yesterday price hold above that 1920 and get back down and test it and actually find some support there. So from my technical view, I'm seeing price actually continue in this trend way up above this 1920 level. Could it take out the two all-time highs and move higher in line with this very strong trend? That would be the question that I'm going to ask our own senior market strategist, Duncan Cooper. Thanks for joining us, Duncan. And what's your take on gold?
Hi Nathan. So let's go through the gold charts. I'm on the monthly chart first of all. Now we have potentially created a double top up here, and we've moved down to a lower bottom, and we're rallying all the way back up to try to move above at the moment this historical high here at 1920 from back in time 2011. So the question is, at this known selling level, can gold move clearly above this level? So let's see, let's drop down to the weekly chart and have a closer look. Alright, so on the weekly chart here, at the moment we're seeing a very strong move up. Trend is up from this double triple bottom that formed down here. Now, of that monthly range, we're above the 62% level, we're heading towards the 79% level. So that would be the target at the moment. What does price do at 1972? So at the moment, last week we closed above monthly resistance. That's a positive sign. Can we move up now and target at least the 79% retracement level there of the monthly range? Alright, let's move down to the day chart and have a closer look. Alright, so the day chart at the moment, clear uptrend. It's showing you a higher top, higher bottom. We've moved up to a further higher top. And yesterday we dipped below that 1920 level, found support and closed strongly above. So the trend is still up here. Yes, we're at high levels, but the buyers are still in command. So I'm expecting at the moment that we could come up and test that 79% level at 1972. If we get up to that level, that's a very high level on gold, and we may well see some selling pressure come in at that level. Now, the other scenario is, even though we are above 1920 at the moment, is that we are at a known selling level and the sellers do start to come in and we see a shift back below 1920, a clear shift below. If we see that, watch 1920 to be resistance for a possible move back down the range. Alright, so at the moment gold is very bullish. Can we see a move further up to the 79% fib level at 1972?